Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. In case you haven't heard, Tesla blew everyone away with their record-breaking Q1 production and delivery numbers. Despite global chip shortages, supply chain issues, literally no production whatsoever of Model S or X due to their refresh, and Q1's historical weakness, Tesla absolutely crushed it, producing and delivering a record number of vehicles, setting the tone for a phenomenal year of growth. At this point, investors shouldn't be surprised when Tesla blows expectations away. They've been doing it quarter after quarter, and they'll keep doing it quarter after quarter. Yet I suspect many stock investors and most on Wall Street are still dramatically underestimating Tesla and have no idea what's in store in Q1 or throughout the rest of 2021. So in this video, I'll share my predictions and what to look out for. I'll talk about what it means for Tesla's Q1 earnings, profitability, potential impact on Tesla's stock price, and more. If you own or are interested in Tesla stock, stick around. Tesla's record Q1 production and delivery numbers came as a surprise even to most Tesla bulls. Well, I'm here to tell you, every single quarter for years to come will see a new record for both production and deliveries. Not some quarters, not most quarters, all quarters. Yet, most investors still harbor doubts. This has become a recurring theme. Wall Street doubts Tesla, Tesla beats expectations, Wall Street continues to doubt Tesla, Tesla beats expectations, repeat. I'm not sure how long this farcical situation can last. Surely the market will eventually wake up to how fast Tesla is moving, how quickly their lead is accelerating, how superior their technology and pace of innovation, and how much bigger the average brain of a Tesla engineer is. But until then, Tesla will continue to surprise on the upside, and Tesla's Q1 2020 financial results will be no exception. So, let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Tesla is maintaining market share and growing production. Tesla maintained a global electric vehicle market share of about 18% throughout 2020 and close to 80% in the United States. Most expected to see Tesla lose share to the hundreds of so-called competing electric vehicles, yet the early indication is that Tesla will maintain around a 20% slice of new EV sales, providing they can ramp production at least as fast as the global EV market grows. Expect updates on Tesla's total production capacity at Fremont and Shanghai, and more importantly, updated timing on when the Berlin and Austin factories, currently under construction, will be completed and begin production. It seems that most of Wall Street is asleep at the wheel on this, so let me be very clear. Gigafactory Berlin will be completed early in the second half of this year, Austin not long after that, and both factories will begin ramping production in the second half of 2021. Yes, by the end of this year, Tesla will be delivering vehicles produced in Fremont, Shanghai, Berlin, and Austin, and I don't believe the stock market is expecting this. What Tesla tells us on their earnings call about current and future production capacity matters a lot. I suspect the stock market will react very positively, at least if investors are wise enough to actually believe what Tesla says they plan to do. Any increase around delivery guidance for the full year or updates on when Berlin and Austin will begin production are likely to be way ahead of Wall Street's expectations. And that bodes well for Tesla stock. Printing money and expanding markets. A few quarters ago, we learned that Tesla's Model Y, despite selling for thousands of dollars more than the Model 3, was actually cheaper to manufacture despite being 10% bigger thanks to boundless innovation, refinement, simplification, and improvements in the manufacturing processes, including the octo-valve heat pump and gigantic gigacasting. This means fat profit margins and, as Tesla has shown, the ability to continually cut prices over time. We also learned Tesla was integrating many of those same improvements in the Model 3, which means higher margins on those too. We'll see the effects of these margin improvements this quarter. Tesla continues to find new ways to do more with less, and as a result, can keep driving prices down or enjoying even healthier margins, or both. This is a perpetual process, and I want to stress this point, particularly to the boneheads who think a price cut can only mean one thing: no demand. Tesla's mission is to accelerate the world's transition to sustainable energy. This means scaling production, driving costs down, and passing those cost savings on to consumers. This is a never-ending process. Next time you hear Tesla cut prices, you'll know this is an extremely bullish signal. I suspect that Tesla is ultimately aiming to maintain margins of around 30% on its vehicles while driving prices into the ground and dramatically expanding its addressable market. Remember, vehicle demand does not scale linearly with price. Each small price reduction dramatically expands Tesla's addressable market. Keep an eye on Tesla's gross automotive margins as they march steadily towards 30%. Production and deliveries. Tesla produced 180,338 vehicles and delivered 184,880 in Q1 2020, both records. However, with literally zero of the highly profitable Model S and X produced in the quarter, only 2,020 of these models were sold, which will probably be a drag on margins. However, Tesla's highly profitable made-in-China Model 3 and Model Y, which continue to ramp, may counter this entirely. In either case, expect near or record revenue, profitability, and free cash flow as a result. It's not complicated. Sell more Teslas, make more money. Cash on hand and profitability. Tesla has officially become a money printing machine, but don't tell the Tesla Q dummies who still think they can't make a profit. Tesla finished Q4 2020 with almost $20 billion in cash, also known as a metric shit ton. And Tesla's savvy $1.5 billion Bitcoin investment has grown by about $1 billion in just a few months. That's a lot of money. Enough to survive a catastrophe, or 3. Enough to acquire talent and technology. Enough to invest heavily in R&D, build half a dozen new factories, and plenty more. I expect Tesla will produce on the order of $1.5 billion in free cash flow this quarter, resulting in a mountain of cash exceeding $20 billion. Tesla's biggest challenge now is spending the money. I mean, really. The $1.5 billion Bitcoin investment was a hint. With 2 enormous factories currently under construction, Austin and Berlin, continued expansion at Shanghai, and improvements at Fremont, it's hard to see how Tesla could be moving any faster. As I said a few quarters ago, moving forward, Tesla's biggest challenge may be avoiding the accumulation of excess cash. Tough problem to have. Maybe we'll see another Bitcoin purchase soon. Full self-driving and other software revenue. As Tesla creeps incrementally closer to solving fully autonomous driving and releasing new features to the fleet, including the epic and ever-improving full self-driving beta, they incrementally recognize more revenue on prior sales of the full self-driving package. No doubt the take rate on their now $10,000 full self-driving package, which has been steadily increasing in price for a few years, continues to increase in line with its functionality. This package, being software, is almost pure profit. So too the over-the-air upgrades like acceleration increases, heated seats, and so on. As time goes on, Tesla continues to turn on more high-margin software revenue, and we'll see even more of this in Q1. Tesla's software revenue over time will utterly transform the company. As analysts recognize this, expect significant price target upgrades. Zero emission vehicle credits. As I've mentioned previously, every vehicle Tesla produces gives off a waste product that Tesla can't use, but other companies will pay big bucks for. Zero emission vehicle credits. I'm not even kidding when I say other automakers are paying Tesla literally hundreds of millions of dollars, in some cases billions of dollars, to buy these waste products. Tesla doesn't need them to avoid fines because they only make emission-free vehicles. Other automakers, however, are struggling to make enough electric vehicles to avoid enormous fines, and so they're buying these ZEV credits from Tesla. Yes, Tesla's competition, using the term fairly loosely there, is literally paying for Tesla to build gigafactories or invest in Bitcoin, however you want to look at it. The latest example is FAW Volkswagen, who are rumored to have agreed to buy hundreds of millions in credits from Tesla in China to avoid massive fines. ZEV credits are literally free money, and until legacy automakers can get their shit together, expect Tesla to continue to make hundreds of millions of pure margin revenue selling ZEV credits to competitors every quarter, and then possibly investing that money in Bitcoin and making $1 billion profit on top. What a world we live in. Solar deployments. Today, solar is a blip on Tesla's radar, but in Q3 2020, Tesla began a strong push towards solar, with Tesla featuring solar on their website homepage rather than a vehicle for around 6 months. More recently, we learned that Tesla has massively increased the price of solar glass roof. Hopefully we'll hear more about this on the Q1 earnings call. Did the price go up because demand is insane? Or were they raised ahead of possible green incentives? Or has Tesla been unable to drive the cost down as planned and instead been forced to raise prices? The answers to this will tell us a lot about Tesla's solar business over the next 12 to 24 months. Battery deployments. Tesla's battery business continues to go from strength to strength with product improvements, regular price cuts, and an endless stream of large-scale storage projects underway. Given the lumpy and unpredictable nature of storage, one project alone could be 10, 20, or 100 times bigger than the average. It's hard to know what to expect for Q1, but like solar, it's only a matter of time before an inevitable explosion in growth. It seems every other day a new big battery project is announced, like the recently announced Apple project expected to bring Tesla in excess of $50 million in revenue. Storage deployments are one area to keep a very close eye on. China. Tesla is dominating China. Their Shanghai factory continues to expand rapidly, producing tens of thousands of vehicles per month. Model Y continues to ramp like crazy and sell like hotcakes. Tesla have been so successful in ramping Model 3 and Model Y that they're now exporting both vehicles to other regions. Whichever way you slice it, Tesla is slaying it in China, and with lower parts and labor costs, expect China to continue to drive Tesla's growth and profitability moving forward. Guidance and analyst revisions. In the second half of 2020, I correctly guessed that Tesla was aiming internally to produce and deliver 1 million vehicles in 2021. Even most Tesla bulls doubted this one, but a recent leak from Tesla confirmed that's the goal. However, a goal and a realistic target are two independent things, and if Tesla has learned anything in the past, it's that the stock market is ruthlessly unforgiving for a miss. The uncertainty of expanding two existing factories, integrating new technology and manufacturing techniques, and building two brand new factories means Tesla's 2021 full-year production could swing by 100,000 units or more, depending on how smoothly things do or do not go. Expect Tesla to reiterate guidance to grow 2021 deliveries materially above 50%, but internally to be aiming for 100% growth. This disconnect between Tesla's vague, lowball guidance to analysts who don't have their fingers on the pulse and what Tesla is likely to deliver in the full year 2021 may create buying opportunities in the first half of the year for smart stock investors. There's literally no way Wall Street would believe Tesla if they said they're aiming for 1 million vehicles delivered in 2021, and Tesla doesn't want to set themselves up for failure by publicizing their stretch goal. Wall Street is expecting around 830,000 deliveries. Tesla will be closer to 1 million. This gap will close. At some point between now and late 2021, the stock market will realize Tesla is on track to come close to 1 million. A few smart analysts are likely to revise their estimates following Tesla's record-breaking Q1, but I think most will need at least another quarter or so before they pull their fingers out and really see what's on the horizon. In short, expect a steady chain reaction of Wall Street analysts raising their 2021 delivery guidance. Each time they do, this is another tailwind for Tesla stock. Don't be surprised if Tesla shares updates on Berlin and Austin timelines, Shanghai and Fremont expansion, tells us they'll unveil new products later this year, e.g. a China-made compact car, European hatchback, provides updates on Cybertruck, Semi, Plaid Model S, 4680 cells, and even the new Roadster. And, wait for it, maybe we'll even hear about plans for further expansion into markets like India and possibly even a hint about the next factory or two. Conclusion. Q1 2021 will be a huge record-breaking quarter for Tesla. And the best part? Q1 2021 will also, by far, be their weakest quarter of the entire year. It only gets better from here. Tesla is growing rapidly, becoming more efficient, driving costs down, increasing margins, expanding their global footprint, embarrassing everyone trying to compete, running circles around legacy automakers, gaining market share everywhere that it matters, banking billions, expanding while others contract, and doing nothing but a whole lot of winning. We're witnessing the end of the ice age at the hands of Tesla. And finally, Wall Street is starting to recognize what's been obvious to others for some time. Tesla has won the decade. It's now just a matter of watching this play out. For Tesla stock, this quarter isn't about you and I, the retail investor. We already know Tesla has won. That's why we've been loading up on Tesla stock. Instead, this quarter is about the dinosaurs on Wall Street waking up to what we retail investors already know. And as they do, expect a steady stream of delivery and price target upgrades which are likely to put upward pressure on Tesla stock as the wider market, the folks who previously bought the FUD, begin to see what's before their very eyes. And I'd love to know your thoughts. How will Tesla stock react to their Q1 financial results? How much will it move up or down in the following day? Leave your best guess in the comments below. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.